Yes, yes, yes. Listen, if I had to trade one strategy for the rest of my life, this would be it. Okay. So I'm gonna break it down, show you guys some examples so you can either use some of it or most of it so you can actually start trading the way you're supposed to trade. So let's break it down. All right. So basically, I follow something that's called, right, E Lee. So E, K, L, right? I'm gonna basically, break it down and make you understand, what it stands for. So this right here stands for environment, right? This one right here stands for levels, entries, and exits. All right. So let's break it down, right? Now, environment basically means that the market is doing different things every single day. If you look at the market every single day, you know that it's not the same every single day, right? So what I realized, the market is changing different states and it's going through four states, right? It's going through a trending state, ranging state, breakout state, and reversal state, right? And how I discovered this was basically I was reading something. This is where baby pips was actually popular at the time, and it was another site though similar to baby pips. And basically this guy said, if I told you that today would be a trending day, 100% guaranteed trending day, can you make money? He said you should, right? Just plop on a moving average, wait till it pull back to a moving average, boom, you buy, and you make money. Well, if I told you today is going to be a 100% guaranteed ranging day, all you have to do is what? Sell at the top, buy at the bottom, right? You can maybe use a RSI or whatever, and then you can make money. And when he said that, it clicked, right? And of course, trading is not that easy, but it clicked because I wasn't really looking at the market that way. Everything at that time was just a trending. I was just focused on trending markets. I was in love with the trend, right? I was in love with the trend. And I wasn't really focusing on just saying, okay, what type of market are we doing today, right? Even when the market was ranging, I was just still looking for trends, right? And what I decided to do was, at the time, I was trading from 9:30 until 4:30, right? So I decided to take screenshots from 9:30 all the way to 4:30, right? Take one, big screenshot at that whole day, and I started to realize the market is changing different states, right? Every single day is not the same, and I'm noticing, okay, we have trending days, we have ranging days, we have breakout days, we have reversal days, and I'm like, wow, and this is when I start to realize, okay, we have different environments, right? So this is how I came up with, Elite, where I'm looking at the market and I'm looking at the market changing in different states, right? So I'm like, all right, I'm gonna start to build a strategy around these different states. Now, since the market has four different states, you don't have to trade all of these different states if you don't want to. But since I trade one market, which is the NASDAQ, I usually trade all these different states because I don't have the luxury to say, all right, I'm only gonna look for trending. If I do that, I can do that. But if I do that, I'm not gonna trade every single day. Nothing wrong with that. It's just that, if I want to participate every single day, most likely I'm gonna have to understand, these different states. So I'm gonna show you guys some examples and go on from there. But let's say if I was trading the stock market, I can literally say, you know what, I only want to trade trending markets because the stock market has so many different opportunities. But if you're just trading NASDAQ or gold or oil, you're gonna find the market is not doing the same thing every single day. So let me break down, a trending market, and just to, before I break it down, just to understand that every single state has like subcategories. Like for example, a trending state, you would have like a strong trend where you would see like small pullbacks. So let me give you a good example. All right, so sometimes you would see the market just trending up, and you have these small pullbacks. I mean, hardly pulling back to any level. Okay, and then you have a wide trend where the market is going up, right, and going down, going up, going down, going up, and this type of trend, you notice that basically sellers and buyers can actually make money. So You have sellers making money to the downside. You have buyers making money to the upside, right? And it's like this channel that we are in, you know, and it's trending up like this. Okay. Now, same thing with a ranging market, right? You can have, you know, a wide range where the market is ranging and it's wide, or you can have these tight, you know, range where it's just like going nowhere, right? And same thing with reversals. Okay, we can have different type of reversals, right? We can have, you know, a head and shoulders, right? Or we can just have maybe a double top, whatever. It's so many different reversals. So every state has different subcategories or just different ways of how that state can actually act. So let's go to the next one, which is levels. Okay, what type of levels am I looking at? So levels for me would be simple support and resistance. So let's say the market is going up. Okay, I can look for a level from a swing high. Okay, boom. Or I can look for a demand or supply level. Okay, so you will get your demand levels right here from the original move. So sometimes the market won't respect this and it'll go straight to that demand level. And we look for, you know, opportunities around here. Okay, so this is type of levels I'm looking at. Or a resistance level could be, you know, maybe something that, you know, in the past you see that the market can't go above it, and let's say that, you know, we go drop down and we come right back to this level again. We know that this is resistance because in the past it had trouble, okay, around here. Okay, so those are the levels that I'm looking at when it comes to the market, right? And everything I'm doing is on a 5-minute chart. You can do it. You can mark your levels on a 1-hour chart, 4-hour chart, daily chart, doesn't matter. I'm just showing you a strategy that I'm using, and you know, you can go from there. So the next one would be entries. So entries, there's so many different entries. You can keep it simple. You can look for maybe a double reaction at a level. So let's say it hits a level. So let's say this is a level right here. The market hits a level. We get one reaction, okay? And then went up a little bit and it came back down and we get another reaction. So the reason why a double reaction is pretty good at this level is because now it's showing us it's tried to basically go down more than once and it can't. Now the market is going up, okay? So it's giving you more confirmation. Or you just look for a strong candlestick formation at a level. Or you can look for a possible trend line break, okay, at a level, okay? You can start with these three, and usually these three will, you know, do good at these levels. If you want to wait for confirmation, more confirmation, you will wait for a trend line break or maybe a double test, okay? Now, from there, when we get in, how do we want to exit, okay? Well, you want to do, in my opinion, minimum 2 to 1, okay? So that's 2 times your money, right? So you want to do minimum, okay? 1 to 2, that's 2 times your money. You can do 1 to 3. Understand that sometimes if you do 1 to 3, if you're using a 5-minute chart, it might go to 2 to 1 and then come right back to your break even. So keep that in mind. Usually when I do a 1 to 2 nowadays, I'm not really putting it to break even. I'm just letting it just go 2 to 1 and that's it. Okay. So, but if I was doing 3 to 1, maybe I'll put it to break even when it hit 1 to 2. Maybe, I don't know. But for the most part, if I'm doing 1 to 2, boom, I'm gonna let it play. Let it play out. Okay. And that's it. So let me show you guys some examples on the charts so you can be familiar or just see it on the charts. All right, so here's a day on the NASDAQ. This is the 5-minute chart where the market basically was trending down, right? Trending down. So here's the open, okay? I trade at 9:30, so here's the open right here. So automatically when I'm at that open, I'm looking at this and I'm saying, okay, we are in the trending market, okay? We're trending to the upside or we're trending to the downside. So a couple of things you could do is say, all right, what level can we look at? Possible, reactions. And this is a level right here because the market, again, remember I look at swing highs and swing lows for possible resistance. So the market came down, went up, right, down, up, down, right? So we see that this swing right here is a possible resistance area, right? So we look to participate if we see a reaction. Now we have 1 and 2. We have that double reaction I talked about, okay? Either a trend line break, but we had that double reaction, right? And then you can put your stop loss above either the reaction, right? And then look for your 2 to 1, right? Look for your 2 to 1, and we go from there. Now, let me show you guys. All right, so here, guys, here's a nice little breakout state, right? The market is going up, right? And we are consolidating right here, and it's breaking out, okay? So we broke out, we pulled back, right? And then we went up. So pull back, we have one reaction right here, another reaction right here. So double reactions, right? And also look at this, a lot of buying right here. So you can definitely get in right here, right? And that long for your profits. Or, okay, you could just wait again for maybe a trend line break and look for your, setup. You can also do a limit order if you want to, but don't have to do that. You could do a limit order as soon as it come back to that breakout. You could put your stop loss below. It's going to be a little, the stop loss is going to be a little bit wider because it's going to be below the swing lows, whatever, and you can look for your, profits from there. But basically, this will be a breakout market, and you're looking for that continuation. So let's go to another example. All right, guys, so here's another breakout state, right, where it didn't really pull back, right? So the market is breaking out, right? We're trending up, and it breaks out. This is 9:30, right, where the market opened. Breaks out. Now, notice how this breakout didn't pull back to, the breakout. So how can we attack something like this? Well, if you notice that it can't pull back, well, most likely it's going to form another level. So here's another level where we have another demand level right here. And when it pulls back to that demand level, okay, you can actually attack that, okay? And you can go long at that demand level, okay, for your 2 to 1, 3 to 1, whatever you're looking for, okay? So sometimes if the breakout is so strong, it doesn't pull back, okay, where, you have that initial breakout, but sometimes, it will form another level, and you just got to play that level, okay? All right, so let me show you guys another example. All right, so here's a good example right here of a ranging market where the market is not really doing anything. It's just ranging, guys, right? And right here, the market opened right here. It went up, hit the top of the range, and then we are at the bottom of the range right here, okay? And the market basically, me personally, I wouldn't, this would be too early for me. This would probably be better. So we got one reaction, two reaction. To me, this is a good, long right here, or you wait for a trend line break, okay? And look for that long, look for your 2 to 1, right? And you're looking to basically profit. So this is a ranging market, different state, right? Different state, looking at the state. Again, we're looking at the market on a 5-minute chart, looking at these different states. Again, you don't have to trade all these different states. If you say, you know what, if the market is ranging, I don't want to trade that day, so be it, right? No one's forcing you to trade, all these different states. I'm just showing you guys, what I'm doing every single day, and go from there. And just because you know the different states doesn't mean you want to win 100% of the time, right? That's the problem with a lot of you guys. You want to win 100% of the time, right? If you can win 50% of the time, 60% of the time, you're good to go, okay? If your system works more often than not. If you're getting 2 to 1, if you're getting 2 times your money and you're winning, okay, 50% of the time you are profitable, guys, right? So that means that if you lose one, win one, okay, you up $100, right? If you're risking $100 on a trade. So don't worry about, win rate. I know some of you guys are obsessed with that. Okay, stop it. 50% is good enough. 60% is good enough. This is why you guys are changing strategies back and forth every single time. You're changing strategies because you're looking for that 80% win rate, 90% win rate, guys. Come on. It doesn't really exist, especially if you're looking at a mechanical type system where it's like rules based. It's going to be very hard to get an 80%, 90% win rate, right? So just keep that in mind. Like, most people are not winning 90, 80% of the time, okay? All right, so let me show you guys another example. All right, so right here, guys, here's where a day where I probably wouldn't trade right away because overall this is like a little tight range where it's just like ping-ponging back and forth. So I will wait for a breakout, right? But overall, even though I'm waiting for a breakout, I wouldn't trade the breakout right away to the downside. Why? Because we're trending up. Okay, I still see we have support right here, right? And right here. So anywhere, let's say that we break this support right here and we continue to go down, then I could start to look for shorts. But right now, it doesn't really make any sense to look for a short. And the way I'm looking at this market is we're still trending up and we just have support right here, okay? So notice how we broke that to the downside. We're bouncing off this support. To me, I wouldn't buy right away. You could, but I wouldn't buy right away. This is where I'll probably participate right here. Notice how we have this support lining up with this demand level, and we have a lot of buying right here. Double reactions. Notice how we got 1, 2. Right, double reactions. You can get in right here, look for your 2 to 1, or you can look for a trend line break again, and then basically look for your profits. Right. Let me show you guys another example. All right, so here's a good example right here, guys, where we have a reversal state, and if you're not familiar with these different states, you would think that this is a bullish market right here, right? And notice how we open right here. This is the open, 9:30. But look at this news bar. This is a news. This is 8:30 news, right? We went up, and as soon as the market opened right here, we erased this bar right here. So I want you to keep that in mind. We erased this big bar right here, and now we have a whole bunch of selling going on, strong selling going on. So to me, if it comes to this area right here, this is where we might have trouble. So yeah, let's say you bought right here, you have to be aware of this, right? Because if you bought right here, you think your target could be up top, you might have trouble around here, okay? So to me, I would just look for a short anywhere around here. We have double reaction. Also, we have a trend line break. We have all this stuff right here, okay? And also, it broke this, create another supply right here. This would have been another, short opportunity, right, to the downside. So I would play this to the short side, even though longs did work a little bit right here. Sometimes it don't work. But notice how it came back. If you try to go long right here, right, definitely got stopped out. Long, got stopped out, stopped out, stopped out. And the reason why is because we had a big buyer right here, then we wiped this buyer out with a whole bunch of selling, and to respect this supply area right here, and it's just going down right here. So if you're buying right here, even though the market looks like it's going up, this is a reversal state. And even we have it like almost like a head and shoulders type situation too, right? So this is why you have to be aware of these reversal states, trending states, breakout states. So let me show you guys another example. All right, so right here, guys, here's where, again, another reversal state. Even though the market looks bullish, what do we have here? Well, the market is going up, and all of a sudden, boom, it breaks this trend line, right? Now, notice how it breaks this trend line. It tried to go back up again, but it can't, and it's creating this little flag right here, right? All right, so as soon as the market opens, guess what? It slams back down again. So in my head, even though the market looks bullish, it's not telling me that it's showing any type of bullish action. So When I saw this, we breaking down right here, okay, I just, participate. All right, we have this, supply right here, and also we have this continuation. So that's why I got in. I remember taking this trade right here, and basically I made a quick 3K on that trade, and I was done, right? So that's a good example of just understanding the different states. So let me show you guys another example, and we're gonna wrap this up. All right, guys, so here's another state right here. The market is ranging, okay? So I'm looking at this, and basically the market opened around here, okay? This is where it opened. So while I'm looking at this, I'm like, okay, we have, support around this areas right here, and then we have resistance around this areas, okay? So that's how I'm looking at this market. I'm like, all right, it's a ranging market, so I'm gonna play it like a ranging market. So pretty much we popped up, right? We have demand right here, okay? So that's the area I was looking at right here. That demand, when we popped up, I came back to that demand. I went long right here, and I got out, okay? So let me show you guys that quick recording. Okay, you see that pretty much I'm in the market, right? And I'm looking to basically get out right here, and you see that I'm up 3,400 for that day. Now, that was that trade because I was playing it like a ranger market, and I was done. So pretty much, guys, that's what I'm doing every single day, trading the market, looking at the market, looking at these different states. Again, you don't have to trade these different states if you don't want to, but I trade one market, so I have to understand these different states because I was in love with the trend to the point where it blinded me. Okay, you know how people say love is blind? Yes, I was in love with the trend and it was blinding me. Okay, it was blinding me from the reversal states, ranging states, like especially when the market was chopping back and forth. Man, I'm thinking, like for example, here's a good example right here. Okay, so we know that we're in a ranging market, right? And I will look for longs right at the top of the range. Or I will look for shorts at the bottom of the range, right? Because I'm thinking trend. I'm like, oh, the market is trending up. Oh, let me buy. And again, just have to understand these different things when you're trading, okay? And again, is this going to work 100% of the time? No. Okay, stop it. I'm telling you right now, that's the reason why a lot of you guys are failing right now. You want something to work. You want something to work 100% of the time, and that's your problem, man. That is your problem. Your problem is you want something to work 100% of the time. If it doesn't, you're going to switch to another strategy, switch to another strategy, switch to another strategy. Stop it. Okay. Again, so you can start with a minimum 2-to-1. If you want to go 3-to-1, you can do the 3-to-1 too. Okay. That alone should help you. If you have a 50% win rate, that should help you to be profitable. Okay. Stop looking for that 80% win rate. Stop looking for that 90% win rate. Stop it, guys. Right? All right. So I gave you guys the game. Now it's your turn to basically put in that work, back test like crazy, take some data, write down, what you have to do, and go from there. Thanks for your time. Hit that like button, subscribe, and that's it. Until next time, talk to you guys later.